Paul Pagnato, your expertise at HighTower is helping people sell their small and mid-sized businesses and helping them invest that windfall. So the first thing I want to know from you right now is, what's the market like for people selling their business?
It's amazingly robust. And Greg, we think it's going to stay that way for quite some time. There is a $500 billion, incredible war chest of capital that's been put in the last 2 years into private equity and venture capital. So that money is going to be there for the next 7 to 10 years, and that's principally to buy middle market sized companies.
And what's the number one thing you tell people when they're selling their business? They grew the business from nothing, they're selling it, they're not going to do it again, so what do you tell them?
They need to hire a true fiduciary, and they need to do that a good 24 months in advance. Once they've started the process, they've engaged an investment banker to actually sell the business, their life changes, they're drinking from a fire hose, and they're not going to have time to deal with their own personal situation and their family. Need to start planning at least 24 months ahead of time.
And what's the biggest sticking point when the deal goes down, generally?
It's never easy, ever. We've been through 80 of these transactions. Every single one, every single time the business owner says, this was tougher than I thought. And what happens is, it's the negotiations at the very end. It always goes down to the wire. And so just when you think you have everything in place and the deal cut, things come out of the blue. And they could be random. There's not one particular thing, but the expectation should be it's going to be tough all the way to the very end.
And then after they sell that business, right now, people are worried about the end of the bond bull market, because usually I would imagine you want to put people into safe investments like bonds. But right now people are saying that bonds aren't safe anymore. So what are you telling people in this particular environment with yields so low and people say they're heading up?
Greg, you're spot on. Someone sells a business, says, Paul, don't lose my money, preserve the capital. Number two, provide the cash flow that I need. And as you know, you invest in a 10-year Treasury bond, you're earning a little over 2%. So one of the greatest opportunities right now is in private investments. We have the biggest gap, we call it the illiquidity premium that exists. So you invest in a 10-year Treasury bond, you're at 2%. You can find private investments, private real estate, agricultural financing, farmland, senior mezz debt, where you're earning 7, 8, 9%. So there's risk with everything, and everybody always needs to consult with their advisor, but it's not like you're investing in junk bonds.
All right, and then what about the stock market? Any views of the stock market right here?
Yeah, we have a lot of concerns. This is critical to have wonderful downside measures in place, hedges in place. You've had quarter over quarter now, earnings decline 1%. The last 2 quarters, revenues have declined. So you haven't seen that since '09. Not very healthy. And then everything that's occurring globally, worldwide, you have a slowdown in GDP. So we have a lot of concerns. Where you do want to be is in the United States. The dollar is very strong. It's going to continue to be strong. And you want to stick with importers, not exporters.
All right. Well, thanks a lot, Paul.
You're welcome, Greg. My pleasure.
And thank you for watching The Street.